Welcome to Ash Allen Talks, the premier podcast from Dubai. Join us as we explore the world of business and entrepreneurship with top entrepreneurs, finance experts, and professionals. Tune in for your dose of business inspiration.
Meet Karl, a podcast guest with a fascinating journey from the following societal norms to breaking free from forging his own path. Initially, Karl pursued a degree in electrical engineering and landed a secure job in the semiconductor industry, taking him across the globe. Despite the professional success, he felt stuck in his personal life, grappling with the financial struggles and the sense of emptiness. However, a chance encounter with two life-changing books while on assignment in Japan ignited a transformation within him. Karl absorbed wisdom from various cultures and people he encountered, including a powerful Chinese proverb that shaped his perspective on sharing knowledge. With over 12 years of experience as a semiconductor engineer and venturing into entrepreneurship, Karl is now on a mission to empower others financially through education. He is a best-selling author, precious metal investor, NLP master practitioner, and the founder of Cashflow Club Ireland. Karl is also a devoted husband and the father, finding fulfillment in family life alongside his professional pursuits. Get ready to be inspired by Karl's journey of growth and empowerment. So, Karl, I would like to ask a main question regarding the finance and all. So right now, 2024 and May was ended and June beginning we are. A lot of people focusing a lot on personal finance. But the key point here is a lot of people focusing on debt paying off and all. So a lot of people are trying with the credit cards and the car loans and the loan amortization stuff and mortgages. So what do you think about the personal loans and personal finance? How a personal finance should be perfect to a person? What are the metrics
Nice.
can measure a personal finance?
I love that. I love that, Ash. And thank you so much for having me on the podcast. You know, people need to realize that there's two types of debt. There's good debt and there's bad debt. If you're taking out a personal loan for, a holiday or something like that, or something, a house or maybe a kitchen renovation or something that is going to cost you, maybe you want to take out a loan, you want to go shopping or something, for the designer brands or something like that. If you're taking out a loan for that, it's going to cost you. Not only will it cost you more than the actual value of the loan in terms of interest that you pay on it, but it's also going to cost you your time. And that's bad debt. You don't want bad debt. However, if you're taking out good debt, if you're taking out a loan for maybe an upgrade on, maybe you're building an extra room on your house or something like that, maybe you're going to Airbnb it, or maybe you are, taking out a loan for a business that you have this incredible business plan, and not just a business idea, but a business plan. You have your mentors, your coaches there. You have everything, all your ducks in a row, and you've already forecast your growth and all that sort of stuff. If you're taking out a loan for that, that's good debt. That's good leverage. That's very important when it comes to debt in personal finance as well. So if you're taking out a car loan, I've seen this trend. I remember I used to watch The Simpsons, right? I'm sure you're familiar with The Simpsons, right? And me being from Ireland, right? I studied all these kind of trends and people movement and how they go about spending their money, right? And I remember one time I watched, it was like in the mid-90s, I remember watching this episode of The Simpsons, and it was Homer went in to buy a car on credit. And everyone was like, what's this credit? Oh my God, yeah, you can buy it. And Homer got the big fanciest car and all that sort of stuff. And that's what's happening right now. They say Simpsons can predict the future and stuff like that. It's real funny, but that's what's happening now with people that are on a low income wage. They cannot afford a car, so therefore they take out a loan. Now, if you cannot afford a car, you got to find ways of not saying I cannot afford. You got to find ways of saying, how can I afford? If you can't buy a car twice, then you shouldn't be buying a car. And I know sometimes for people, I know we're talking a little bit about cars and stuff. It's a necessity and stuff like that. You need to get to work and stuff like that. But then if that's the case, then don't get the brand new car. It's a depreciative liability. It's not an asset. People think that car is an asset. It's, oh, this is an asset. It's like, no, how can a car be an asset? It costs you money, it costs you maintenance, it costs you fuel and all that sort of stuff. So I know we touched on the car there. And you know, sometimes people just need that kind of bit of a wake-up call. Maybe they're thinking about getting a new car, you know, maybe next year or something like that. And they're like, oh, I want to get a brand new car. So it's like, you know, just like, there's no point looking like you're rich and having zero in the bank account, you know, thinking that you're driving a nice fancy new car. Nobody gives a crap anyway. You know, excuse my language, but nobody cares anyway what car you drive. You know, you got to get it from A to B. But if you have a passion or a love for cars, great. Just make sure that it's, you know, you're not using any of your own money. Make sure that, you know, you're not using, like, if you are taking out a loan, make sure you have a business there. Maybe you fix cars or something like that, you know. But like, just be mindful that, like, there's two types of debt. There's the bad debt and the good debt, and you want to get rid of any bad debt as possible and have as much good debt as possible. Wow. Or at least know the differences.
Wow, it makes sense a lot. And Karl, I would like to ask one more question regarding this car loan. So what is the right time to buy a car for a person?
Oh, like, I mean, it depends on their needs. You know, when in Ireland, we can drive a car at age 17. I got my 16. I can't remember, but anyway, I got my theory test, my learner's permit at 6. And yeah, I think you can drive a car at that stage. And then I got my full license. 17, and then I got my full license at 18. And I remember thinking to myself, wow, I want a car, like, you know, because I want to drive around, I want to be around friends and stuff like that. And I didn't realize how much it was costing me. But like, it really depends on your own needs and your own, like, I couldn't, like, I love my car, like, and I've driven all across Europe in my car as well. And you know, like, for me, it's like, you know, I need a car that's practical. I've got 2 kids now. I just had a new baby there 3 weeks ago now. And you know, I'm already Karl, thinking
congratulations.
Yeah, thank you. Appreciate it, Ash. And I'm already thinking I need the practicalities. I don't need a fast Lamborghini or a fast Jaguar or a fast Maserati. That's cool. That will come. All of those will come. But at the moment, I need practicality. I need a big boot space for a double buggy. You know? Yeah. So these are the things you got to look at where you are in life and the practicalities of it as well. You know, make your life as simple and easy as you can without getting into too much bad debt, without taking out too much loans as well. You know, so great question.
And Karl, when it's come to the personal finance and all, the credit card playing a huge and major part of the role in personal finance. So I have seen some trends, or some of my friends actually, they have using like 2 to 3 credit card, and they think at the month end with the salaries and the wages, they can pay it off. But at the end point, it won't happen actually. And they are in a like a trap, like paying 35 to 40% of our interest every month or every year. So what do you think about this kind of people, or what is your advice for using the credit card in a right way?
You know what, you know, there's some people that will, you know, there's some big billionaires out there that, like, say, cut up your credit cards. And then there's also some billionaires that say leverage your credit cards. And I think it is very important to know the difference. And it's kind of it's very similar to good and bad debt. Like, you know, me personally, yes, I have a credit card, but I literally only will use it in an absolute emergency. I've actually 2, but I use it in only an absolute emergency, you know. But that takes a lot of discipline. That takes a lot of discipline, and it's very habitual. So if you're in that mindset of, oh, I'm going to use my credit card every single month, but I'll pay it off at the end of the month, but then it doesn't actually happen, and then you end up paying off more. That's a waste. That's such a waste of your own money and your own time, particularly if you're an employee. If you're an employee and you're trading your time for money, just realize the price of your time. You know, it's not your hour, like the hourly wage that you get, you know, because that's how much you're paid gross. You know, think about the taxes then have to come off of that. So, really quickly, if you're on €20 an hour, right? Like, by the time the tax man takes his share, you only have €10 in your back pocket, give or take a penny or two, with income
Yeah.
tax, and in different countries as well. I know you're in Dubai now, right, Ash? I
Yeah.
mean,
Yeah.
I'm
Correct.
I think there's no income tax in Dubai. Am I right in
No
saying
income
that?
tax at all. Yeah.
Wow, no wonder why there's so many people over there. It makes sense, right? And I
True. True.
actually did think about going and
Yeah.
living over there as well, because it's a fruitful place,
Yeah.
But so it is really, really interesting, when you get into the psychology behind the programming that people have when it comes to get yourself a credit card. When I went to college and I studied electrical engineering, I remember the first day there was a bank in, welcoming, and they were like, oh, sign up and we'll give you a credit card. We'll give you an overdraft of like €600 or something. It's fine, blah, blah, blah. But, they're all just rubbing their hands thinking, here we go. Here's more money for us, like, because we can charge them interest,
Hmm.
and that is something that like boggles my mind as like, I understand how it operates, and that's why would you, if you don't need to do that, you
Yeah.
know? That's the questions that you got to really ask yourself as well. It's like, what am I doing here? Like, think about what you're thinking about, if that makes sense. Like, okay, I go in and buy this, I go and get lunch with my friends and stuff like that. I put it on the credit card, and at the end of the month, oh, I forgot to pay it off. I leave it till next month. And then the interest, okay, it's only 20, it could be only $20 or €20 or £20, a little bit extra. But like, if you let that creep up, eventually, you're going to get a bigger bill. And that lunch is even more. And
Hmm.
especially when you're trading your time for money and you're like, oh my God, like, when you realize the price of your time, then you start thinking about money differently as well. And when I say money, I mean currency,
Wow.
because there's a big difference between
Yeah.
money and currency.
Yeah. And Carl, when it's come to investment part, so a lot of people trying to keep some money as an emergency fund and for some
Yeah,
opportunity fund, but
yeah,
there are some new people advising like to keep the money as a gold, not as a cash
mm,
or a dollars. So what do
yeah.
you think about this kind of approach? Is it better to have gold with people, or what do you think about the liquidity and all?
You know, it depends on your own personal preference, and it depends what you're drawn to. I teach my clients about being in alignment with your investments. And I always give them this example, right? Imagine you're a personal trainer or a fitness trainer, right? And you're making money through, you maybe have an online business, fitness, coaching, that sort of stuff, right? And you're making money there and you want to start investing. You want to make your money work for you, right? Imagine you're promoting health and you're promoting being strong and being lean and being, really in the best shape of your life. Yet you're taking some of your money and you're like, you know what? Oh, I think I'm going to start investing in McDonald's, or I'm going to start investing in Coca-Cola because they give great dividends and they give great returns, or I'm going to invest in this, that, and the other. That's out of alignment with what you're preaching. You're preaching health, wellness, all that sort of stuff. Yet you're putting your money into these big corporations that suck the life out of people. That
Yeah.
we all know, like, we all literally know how bad eating fast food is, how bad drinking fizzy drinks, yet loads of people still do it, including myself. Like, I'm fond of a takeaway every now and then. Like, I'm fond of a fizzy drink, but at the same time, I would never ever put my money into those corporations because it's not in alignment with me, and that's very important to realize what's in alignment with you, because when you get into alignment, the money, the abundance, the wealth just flows into you. The law of attraction, I don't know if you know about the book The Secret, I'm sure you do. Like, everything, God, Allah, Buddha, whatever you believe in, that flows into you once you start aligning yourself into what it is that you're interested in. And what I found, for me, my big first monetary investment was not just myself, and
Mm.
investing in myself, books, seminars all across the world, webinars all across the world, paying coaches thousands upon thousands of euros of money, to get the information that I needed, But my first monetary investment was gold and silver, because I didn't really, it was back in 2018. I didn't have the money for property, because property can be quite a high gate in. Now there's different ways of getting into property at a lower entry level as well. But I just thought, no, gold and silver for me, I'm in alignment with. It's God's money. If you believe in God, if you believe in Allah, Buddha, Jesus, whatever you believe in, it's going to be here long after you, and it was here long before you as well. And it's real money. I mean, the governments are hoarding it. They're buying more of it. So why not you as well? Now, that was in 2018. Obviously, there's different assets. There's the stocks, there's cryptocurrencies as well, like that. But I keep very little money, very little currency in the bank. I have my expenses paid each month, but I do not want to keep currency in a bank, because what that does is you're losing the purchasing power. And that's why I keep it in assets. I keep it in property. I keep it in gold and silver, a lot in gold and silver. I keep it in stocks and shares. I keep it in cryptocurrency. So it is important to understand that there's no point having just money sitting in the bank unless you're going to use that money to start funneling it into assets, cash flowing assets, or even portfolio gain assets as well, capital gain assets. Important for your listeners to understand is that, you want to know the difference also between cash flowing assets, capital gains, buy low, sell high type thing. A lot of people are doing that in the crypto space as well. Same in the stock market as well. So you gotta really kind of take a bit of time to go to yourself and say, okay, what's in alignment with me? I heard this other story as well about particularly gold and silver, is that if you're more attracted to the sun and you maybe like sunbathe and stuff like that, you're probably going to go more for gold. Whereas if you're attracted to the moon, which is something that I am, I lived in China and I got big into the lunar calendar, and even now I feel that kind of energy of the lunar calendar. And I spent a lot of time in Bali in Indonesia, and I was like, wow, the lunar calendar, like, really pulls me. And I'm like, all right, I'm attracted to that. Like, and I invest heavily in silver, but also on a practical side, because of my electrical engineering, I know that it's a practical metal. And I know it's used. It's in the laptops that we are looking at each other. You're in Dubai, I'm in Ireland, and there's silver in both of our laptops, and a little bit of gold, just not as much. So it is important to really kind of figure out what it is that you're truly aligned with and truly pulled towards. If you're big into numbers, you're big into spreadsheets and graphs and stuff like that, maybe stocks and cryptos for you. If you, and same with gold and silver as well. If you're big into kind of helping people, live a better life, maybe property, because you're supplying people with a roof over their head. So there is kind of different ways of looking at it as well. Great question, Ash. So to kind of sum up, if you keep money in the bank, it's going to cost you your money. Do you know what? It's actually so funny, Ash, and talk about coincidences or serendipitous moments. But a couple of days ago, I found my brother's old bank ledger from a bank here in my town, and I looked at it, and he had one Irish pound. We used to have the pound currency, Ireland pound, not the UK pound, but the Ireland pound. And that was in 2000, the year 2000. And I did the conversion of how much it's worth now, when we convert into euro and then inflation and all that sort of stuff. €1.58. That's how much it's gained in value over 24 years. 58 cents. Like, what?
Crazy.
Like, that's nothing. And people think, oh, I'm going to keep my money in the bank and I'll earn 2, 3, 4% interest, when they don't know about you're going to be taxed on that gain, and they don't know about inflation is not the true inflation number that they're reporting, because they don't take food and the price of energy, the price of gas, oil into account, because it's too volatile. So everything else, like, and they don't understand this, and that's okay. And that's why I help teach my clients and get that understanding as well, so they get their money working for them rather than just leave it in the bank. You know?
Yeah. And Carl, regarding investment, so let's say in a time period of inflation, so actually the prices are keep getting higher. So inflation is very good for investors actually, right? For exporters and importers and all. So they're earning a lot. when the inflation getting higher, the household prices also keep higher and getting a good income. But actually,
Yeah.
when it's come to a middle class person who is rely on
Mm.
the job without any kind of investment, when the inflation is keep kicking up, so how he can manage his expenses without increasing the income?
Yeah. That's one of the middle class is getting squeezed now on purpose, Ash, on purpose. It's getting squeezed. They want you to own nothing and be happy. This is not my own opinion. This is, the people that, travel over to Davos and set the arrangements there. You're nodding your head, you understand, you are in agreement. And this is the thing. The middle class are getting so squeezed that they won't end up owning anything, because it's all by design. Now,
Yeah,
what can the middle class person do? First of all, they need a budget. The budget for me and my wife, Brona, is our Bible. I remember being presented an opportunity there a couple of weeks ago, and it was actually quite fruitful. And I was like, do you know what? Okay, yeah, that seems okay, And then I said, but hold on, I'm not ready to invest now. And then the person who was coming to me and was like, oh, come on, Karl, no, blah, blah, blah. And I was just like, hold on, no, I have a budget. I am strict with that. It's like, again, using the analogy of a fitness trainer, tracking your calories is the same as tracking your pennies or your euros or I think in Dubai they use dirhams. Is it dirhams?
dirhams. Yeah,
It could be,
correct.
yeah. So track everything that is coming into you. So if you know how much you're getting paid, then track it. Now, sometimes you have to sacrifice. Sometimes there is a little bit of sacrifice there that's needed in periods like this, in periods of high inflation. You have to do a little bit of sacrifice, or what you do is you keep your expenses really low. So keep your expenses as low as possible within reason, but as low as possible, but then find other ways of increasing your income, whether it's setting up an online business, opening up an e-commerce, selling things on the marketplaces. Like there's so many people that are sitting in houses. I have an old iPhone there, right? I went on a website to see how much I could get for €100. Easy €100 ever, like so many people have so much kind of material stuff that if they just realize that actually, I can sell this. But see, what happens with the middle class is they get comfortable. They get, it's humdrum. It's okay, clock in, clock out of work, 9 to 5, grand, happy days, get the kids to bed, blah, blah, blah. Then watch my shows on Netflix, have a bottle of wine, have yada, yada, go out with the guys at the weekend, go out with the girl. And it's just that kind of comfort zone.
Yeah.
But what happens is when you start feeling the pinch, you start getting annoyed. And you're like, oh my God, I can't do that anymore. But you have to realize that everything that's happening outside, it's by design, but you can only control what's happening in your economy. So you look after your own economy first. If it means that you have to give up a few things, so be it for a little while. You're an adult. You can go without it. You're not a child. You're not like throwing things out of a pram and going, it's not fair. Life's not fair.
Yeah, true.
Life is not
100%
fair.
true. Yeah.
And nobody said it was going to be either,
Yeah.
So then be open to different opportunities. Ash, I love being pitched to. I absolutely love, like, people pitch to me on a weekly basis. And I love that because I know that I'm attracting wealth. And even if the opportunity there is not the right one for me, that's okay. There's nearly 8 billion people in the world. So the opportunity will be there for somebody. But if you are being pitched it, that's a good thing because you have an open mind. You are ready to receive. So many people are not ready to receive. So you got to really hone in on your expenses, keep them as low as possible, but also be open to expanding your means. That's very important as well, Ash.
Wow. And Karl, I'm having a very important name to announce here. So actually,
Nice.
I think you are very close to him, right? He's the author of Rich Dad and Poor Dad,
Of
Robert
course, yeah,
Kiyosaki.
Mr. Robert Kiyosaki.
What do you think
Yeah.
about him? What is the teaching? And I am very curious about to ask about that question because I have
Yeah.
seen a lot of close picture, you and him, right?
Yeah.
So, and he's a very good investor and very successful
Yeah.
entrepreneur. and
Yeah.
he's talking a lot about the money and the investment and invest in gold. And right now the
Yeah.
Bitcoin is there, right?
Yeah.
So
Absolutely.
what he's
100%.
teaching, and what is your overview of a Bitcoin investment actually?
You know what? Like, do get yourself some Bitcoin. Like, why not? But realize that if you're only going to put like 100 or €200 in to Bitcoin, even if it goes up 50%, you're only going to make a small gain. So, like, you got to remember why that you're investing into Bitcoin. Like, are you pro digitalization? So, are you anti cash then? You know,
Mm.
if that means, if you're pro digitalization, cryptocurrencies, Bitcoin as well, then, you're going to be anti cash, you know. But you also need cash at the moment. We also need cash to live. We need the transactions. A lot of people are tapping now on their cards, and that's fine, But just remember that when your daughter loses her teeth, you won't have any cash to put under the pillow when the
True.
tooth fairy comes.
Yeah, yeah,
So
yeah.
you gotta remember, like, but for me, Robert Kiyosaki, I mean, he's totally changed my whole life. And my wife, we weren't even together at the time, and she introduced me to Rich Dad Poor Dad. She said, read this. And I was on a work trip over in Japan, and I listened to it on audio, and it totally blew my mind. I was like, oh my God, this is it. This is the path that I need to go down. This is how simple it is. Not easy. If it was easy, everybody would do it. But this is simple, Start educating yourself. And we're fortunate that we're being directly coached by him as well. And we've met him, in Singapore. We've met him in Germany as well. He's got a phenomenal team around him. He's changed the game for all of this. Like, there's so many other people out there. I won't name any names, but there's so many other people, kind of gurus and big people that are so successful as well, but have his teachings as well and just put their own spin on it and stuff like that. But yet, at the end, it's all cash flow. It's all all of that sort of stuff that he teaches, the ESBI quadrant and all that sort of stuff. Like, just, I'm so grateful for him, his team, and everyone that he has worked with as well, because, like, it's transformed my life. And then I owe it. Like, I use a Chinese proverb where basically, if someone gives me something of certain value, and I benefit from it, I have a moral obligation to share with others. So therefore, I'm sharing it now. I'm passing the torch on. I'm getting what I'm getting, so I need to pass the torch on to other people, because there's so many other people that are coming to me, even from my hometown, are messaging me saying, hey, Karl, like, I need, like, whether it's like a money or something like that, and I'm like, wow, like, have a read of Rich Dad Poor Dad. This can change your whole trajectory, and it's a mindset thing as well as a practical investment guide as well. So very important. But yeah, it's an amazing journey to be on. But you got to really hone in on yourself and know thyself, as they say.
Yeah, yeah. And he's an amazing human being, and a lot of people
Mm,
following him, even the youngsters and elder people and all. And he's an
yeah,
icon, and
yeah,
he's a leading role in finance, and yeah, of
yeah,
course. And it's very good to remember him here. And I
yeah,
would like to ask one more question, Carl, regarding this.
yeah.
Let's say if someone starting late, and how
Mm,
his her retirement plan will be.
mm. Whoa, retirement plan. Okay, so you're probably going to be ending up working until, like, you're in your 80s or 90s. And people will laugh at me when I say this, because, we're human beings are living longer, which is great.
Mm.
It's fantastic. I remember growing up and hearing people passing away in their 70s and thinking, wow, that's quite old. And even in their 60s thinking, oh, that's quite old. But now people are living their 90s, they're nearly hundreds as well, And I think, we're going to be, the the age of retirement, if you're in a job, is gonna raise, whatever country you're in, and it doesn't matter really whatever country you're in, because we're going so globalists, and this is on purpose and on design. We're going all globalist, that it doesn't matter what country you're in, you're still going to be working, you know into easily into your 80s, you know, if you're in that kind of job employee mindset. An entrepreneur, a business, you know, businessman or woman, they're going to work until the day they die. Like I'm gonna work until the day I die, like, you know. But at the same time, you know, like if you're in a job, just know that the retirement age is gonna 100% increase. It has to facilitate, you know, the more humans, even the population increase, and then also the fact that we're living longer. Will your retirement money be there at the time? Uh, that's what. See, that's the thing. Like when you pay, I don't pay into a pension. I think pensions are absolute the biggest legal scam in the world. You know,
Yeah.
when I say
Yeah.
legal, I mean they are like imagine someone coming into you in a room with their shirt and tie and being all fancy dressed and go, here, give me your money every single month, and I will guarantee you, or no, they can't guarantee you, but I will say the word guarantee. I will guarantee you that in 50 years time when you retire, it will be worth 1.2 million. And you're like, shut up and take my money. There you go.
Mm.
But like, you know, what happens if you're one of the unfortunate people that die before your retirement? And that can happen, you
Yeah, yeah,
know,
yeah. That's happening. Yeah.
unfortunately, that can happen, you
Yeah.
know. Some people don't realize that, you know, they really don't. And others, you know, what happens if you're one of those unfortunate people that hit in a recession at the time, and it's like poof in a blink, you know, what's the saying, the bull goes up the stairs and the bear comes out the window. Like in an
Yeah.
instant, your pension pot can be, you know, gone like that. So it's a risk that you have to take. And I don't personally put money into a pension, which is, you know, goes against the grain of what most people, most financial advisors will say, because they need to make money off your money as well. They earn commissions, and that's
Mm.
totally fine. But when you understand better, you do better, you know. So, but like, will your pension be there? That's the golden question, you know. But who knows in this geopolitical climate that we're in now? I mean, two wars happening in Europe at the moment. You know, crazy things going on around the world. Sensitive CBDCs coming in. You know, they're going to bring in a lot of control as well. So you gotta remember to yourself, what can I control within my economy, and can I have something outside of the system? If you can do that, which I do, happy days. You're in a beautiful position, you know.
Wow.
Um. So yeah,
Wow, great, Carl. And Carl, we have discussed a lot about the pension scheme, and we
yeah,
have discussed about the Robert Kiyosaki, and we have discussed a lot about the financial controls and how the spending should be, and the economical
mm,
scale, and how this inflation time have to be concluded with each and every individual, and how they have to plan their budget and all. And this is a very
yeah.
crucial time, and we have discussed a lot, and we are near to exit. And Carl, I would like to ask at the last, what is your advice for the youngsters and the listeners who are listening to this podcast regarding the finance all around them?
Wow. Wow, just keep investing in yourself, your knowledge, the books, the seminars, the webinars, get coaches, get mentors. Don't be afraid. It's so cliche, but don't be afraid to fail. Like we started a business back in 2020, and it was an online business, and then obviously COVID hit, and then we were like, oh no, and then we just closed it down, and it was like, right, grand, next, you know. Don't be afraid to try something new, you know. Get around people that have what you want. Start emulating them. Start, you know, showing up like them. Start learning from them as well, you know. And you know, just realize that, you know, you're going to be dead soon, and you know, in the grand scheme of things, you know, you're what you do in life is nothing but a fart in the cosmos of time. You know,
Yeah,
so
yeah,
don't take yourself too seriously. Laugh at yourself as well. And don't take anything personally as well, because everyone's going through their own thing. Sometimes they'll take stuff out on you, and that's okay. Just brush it to the side, water off a duck's back, and just, you know, just keep smiling, keep growing. You never know who you can, you know, you never know when you have a smile on your face throughout the day, that person might need that. That other person might need, your positivity. Be that light, be that beacon of hope for others as well, and stay strong, stay mentally strong. What happens between your two ears, that's the key. Be mentally strong in this crazy, crazy world that we live in. And there's a famous band in Ireland called Aslan. And then they're saying, like, how can I protect you in this crazy world? And it's like, protect yourself, protect by all means. Like, there's big fighters, MMA fighters from Ireland, I'm sure and the first line of attack is a good defense, so protect yourself at all costs as well, and don't worry about what other people think as well, because they're going to think it anyway. And if they're not paying your bills, who cares?
True, true. Wow, that's very powerful word from Karl. And Karl, where the listeners can find you?
Yeah, you can get me on Facebook. You can get me on Instagram, following Karl Davidson. Follow our Cashflow Club Ireland on Instagram as well. We've got a great Facebook community as well. We hold events. Our next event is actually Sunday the 9th of June and Saturday the 15th of June. And yeah, we're on LinkedIn. So we're on pretty much every social media as well, except for TikTok.
Wow. And I will leave all the description and the link below. And Karl, thank you very much.
Thank you, Ash. I appreciate it. Keep up the great work.